Oh, hello. Hopefully you guys can hear me. It's Richard Van Ommen here from the Katana Group. Just want to do a quick live check, make sure you guys can hear everything I'm saying. Should be running in now. So, yes, looks like we're live through Facebook onto the camera here in my office. Today we're going to be talking a little bit about raising finance. So today's subject we're going to be discussing is the three biggest challenges around investing in property and around raising finance within that. It should be a very, very exciting session. I'm really much looking forward to working with you guys. Just want to sort of make sure you guys can all hear me. Just want to do a bit of a sound check. So if you're hearing me, just do me a favor, just give me a quick like or a chat or message, just so I can make sure you guys are actually hearing what I have to say, and making sure that the Katana Property Channel Facebook Live is currently working. So just want to sort of check in. I'm looking down here, by the way, because this is where the camera is. So for those of you that are joining us, so we're going to be discussing the three biggest challenges around raising finance, which should be very exciting. I'm very much looking forward to working with you guys within this. If you've got any questions, do feel free to ask them throughout. I'll make sure I answer everything you can. If you're catching this on a recording, please feel free to drop a couple of messages within there, and I'll make sure as part of that we pick that up and we'll try and get a response over to you as well. So today's all about raising finance, and we're going to be talking about the challenges within that. So the very first challenge when it comes to raising finance, interestingly enough, that people always fear is the ability to be able to pay the money back. So people always have a fear and concern around raising finance, and the biggest fear typically around that is being able to pay the money back. Now, it's a very useful and very interesting fear and concern, and I think it's a brilliant one to kick us off. So just to discuss how we handle that, essentially this is the misguided belief that it is difficult to pay an investor back. The very first thing you need to ask yourself before you try and raise funds through an investor or through a friend or through family is, will you do everything it takes to make sure they get paid back, even if things don't work out as they should? And if the answer is yes, then you should feel comfortable with raising finance. The second thing you need to be aware of is you need to take a look and consider the deal that you are currently working with. Now, if the deal you're looking at and the deal is absolutely fine and everything seems to be good with the deal, as far as I'm concerned, there's nothing wrong with you getting kicked off with moving forward with that deal. If, however, you're finding it difficult to be able to consolidate the deal that you're looking to raise the finance against, i.e. if you're raising the finance against a deal where it's really not a great deal, then you're obviously going to be looking at, you're going to be risking the investor's money. And is that really a risk you're looking to do? So that's a little bit around the first biggest challenge. Now, obviously, I'm going to delve into that a little bit more in depth in a minute, but I'm just sort of lightly touching across all three, and then I'm going to come back to them. The second one is all around the belief. Okay, so this is the understanding, this is the belief. Now, this may relate to you. You might feel like you have some concerns or some beliefs around raising finance. And interestingly enough, it's not the logical steps. So I'm going to go through the logical steps of how you raise finance. It's not the logical steps of how you raise finance. It is actually the belief system around that and the fear. Now, a lot of people tend to suffer with a lot of fear around raising finance and a lot of concerns around raising finance in terms of being scared of it not working out, scared of the investor risking the money, etc., etc. Now, please understand one thing. Your investors are investing the money, firstly, because they trust and like you. That's the first and foremost. The second reason that people are looking to invest the money is primarily because although they like you and they care about you, it's because they then get a better return than they would elsewhere. So let me just challenge a belief and just challenge a thought for you very simply. Now, if you consider how much money you currently, or what return you currently get on your money that you have invested, and what return other people typically have on their money that they have invested. The vast majority of people have their money invested in things like stocks and shares, bonds, or just standard savings accounts or ISAs. Now consider the standard returns that you can expect through those. Typically you'll find they're 5% and down. And you'll also find that they're often higher risk. Things like stocks and shares can be very high risk, so potentially a high reward. However, as a general rule of thumb, the vast majority of people over time end up losing money in the stock market as opposed to gaining. Although, don't get me wrong, some people do gain, but just to give you a bit of an idea. In terms of ISAs, of course, very secure, but you got to keep your money in there for a long period of time, and your returns are very low, like 1%, so not very high. And then you consider other investment vehicles that other people take. Either they're high risk and therefore not very stable in terms of return, or they are very low returns because they are stable. The only investment vehicle where you can actually expect a really, really good return is property. Okay, nice and simple. In investment property, providing you're buying right, you're buying for the right price, and you're buying based on cash flow, and that is the most important thing. That is the first thing we buy for, is based on cash flow. That's our income after expenses. Providing you're buying based on cash flow, you're then in a significantly stronger position in terms of returns. Let me just quickly check in on the Facebook. I just want to sort of make sure you guys are hearing me. If you hear me, please do me a favor, just drop me a chat or a message in here. I'm just going to quickly check in quickly. So just want to see if you guys are all hearing me okay. I know we're getting a lot of chat in the background. Okay, perfect. Okay, awesome. So it looks like everything's working and all functioning beautifully on Facebook. So if you are catching this, brilliant. If you're having any difficulty with this, Alan, awesome. Good to see you on, buddy. Very, very cool to see your name. It's been a long time since we spoke. Very cool to see you on, man. Hope you enjoyed the live feed and the live stream on what we're doing. Apologies for the sound of my 1-year-old. Unfortunately, the whole lockdown thing means I have to run all of this out of my home, out of my office, as opposed to being able to run this out of a venue like I typically do. So the second biggest challenge around investing is often the mindset, and it's the belief. And a lot of people often think, yeah, but they're taking this big risk, etc., etc. Now, just do yourself a favor. Just consider for a second, is it really a high risk to invest in property? And hey, Thomas, awesome to have you in as well. Very, very cool. Good to see you, man. So is it really a high risk to invest in property? And consider, what other investment vehicle in the world would a bank actually lend you money to invest in? Have you ever gone to a bank and said, hey, look, I want to buy a whole bunch of stocks and shares. Can you give me some money? Can you lend me some money? And of course, the answer is no, they won't do that. Or you say, I want to go buy some gold. Can you lend me some money? They're not going to lend you money to go and do these types of strategies. As a matter of fact, one of the only things a bank will typically lend you money for is item-backed assets, things like property. Okay, this is where you tend to find they will be more comfortable lending you money, and at a very, very low interest rate. Now, I don't know about you, but I don't think of banks as being particularly stupid. I just think of them as being, maybe the investment bank, they're very risky and they tend to be a little bit more flamboyant with the money and have more likelihood of losing it. But a standard bank where you get your mortgages, they're very solid, very secure, been around for centuries, and they'll be around for centuries more. They're generally very savvy with money. Now, if they're willing to lend you 75% of an investment purchase, as far as I'm concerned, it's a pretty secure investment option. Now, all you're doing is you're enabling your friends and your family and the people that you're offering an opportunity to raise the funds in for, you're allowing them an opportunity to be able to essentially act as the bank, taking the secure position as the bank. Now, the important thing to consider is the fact that these are going to be your friends and family and people that you actually know. Now, when it comes to raising funds externally, now we've had a question from Adam Colley. So thank you for asking the question, Adam, around is it legal to raise funds externally? Okay, so is it legal to be approaching people to raise funds if you haven't checked if they're a high net worth individual? So there's a bit of a grey area here, and I'll just give you my interpretation of the grey area. Of course, seek your own legal advice, make sure you're comfortable with where you're at. But the grey area very simply is if they are not somebody that you are already a friend with. Okay, so if they're not a friend, then when it comes to you raising finance through them, you need to make sure they are deemed as a high net worth individual. I believe it was P2 or something like that. It was an item that the government brought in to make sure people weren't being taken advantage of. And essentially how it works is if somebody's a friend or family, okay, you can raise funds, no problems. If they are an external, somebody you do not know, okay, at this point, then you're going to have to go and make sure they're a high net worth individual, which basically means they either need to, I believe it's an income of 100,000 or over $1 million's worth of assets or equity. I'd have to double check, and you might want to just Google that. I can't remember 100% off the top of my head right now, but it will be online. It's all this information is available on Google just for you to double check. The alternative is, what you can do is you can befriend the investor first, build a relationship, build a bond, and at that point, if you think, hey, look, this could potentially work, at that point you can approach them as an investment. Now, this is a very different take. Now, this is my personal take on how to do it, as opposed to just going straight in and being like, hey, I don't know you, do you want to invest? Oh, by the way, are you a high net worth? If you build a relationship with a person first, you've then built the friendship. At that point, then to be able to approach them, of course, it's always useful to know if they're a high net worth or not. But if they are not, I don't believe it holds the same sort of issue, because they are then friends and family, and they're investing as a friend as opposed to being a random stranger being approached. Hopefully that makes sense. Of course, use it sensibly, do your own research, make sure you're comfortable. And then the third biggest challenge around investing is the approach that people take. Okay, the approach that people tend to take is they feel like they are trying to raise funds in terms of asking. So, hey, could you lend me some money to invest in a property? Sorry, Adam, so I've just had a quick message from Adam. During the financial year immediately preceding the date of question, annual income of the value of 100,000 or more, held throughout the financial year immediately preceding, net assets value of 250,000 or more. Okay, so it wasn't a million, it was 250,000. However, the income was correct. So that would be a high net worth individual. That would be what qualifies them as a high net worth individual. Now, of course, if you have a relationship with a person preceding the finance raise conversation, then it's a slightly different train of events. Again, make sure you're comfortable with how you do this all. This is all on you. I'm just giving you my interpretation and how we deal with things. Okay. So the third biggest challenge is people tend to have a challenge with the way in which they basically engage and enter that dialogue. Often people feel that when they have their property deal agreed, that they then go out looking for investment. Now, I did this right at the beginning, sort of 6-7 years ago, ahead of buying my first property, or my first investment property. Let me rephrase. I remember calling through every single person in my phone book after getting a deal agreed and saying, hey, it's Richard, I've got this deal, and I want to know, could you lend me some money to buy it? Now, interestingly enough, nobody loaned me money to buy the house, because one, this isn't the right approach to be taking, because it's just not. And two, the way in which you need to be approaching the conversation is that it is not about you, it is about your investors. It's about them. It is what they get out of the deal. So this is where we come into the dialogue around, so it ties back into number 2. What are they getting as a return elsewhere? And of course, the return they're getting elsewhere is typically very shoddy, or it's very high risk. So what you're doing is you're offering an opportunity for them to invest in something that they typically wouldn't get an opportunity to do elsewhere. So interestingly enough, and my genuine belief is, if you have an opportunity where your friends or family or somebody you personally know gets a chance to be able to earn 6, 8, 10% on their money every year, compared to the 1% or less that they typically get in the bank or in their investments, as far as I'm concerned, by not offering them the opportunity to invest, you are essentially robbing them of the opportunity, which is my 100% belief. Which is why any chance that we have an opportunity to raise finance, we have an opportunity to reach out to our friends and family and say, hey, look, what have you currently got? What are you currently getting for that? Would you like to get more? Okay, nice and simple. And if the answer is yes, they'd love to get a greater return, then of course we put a bit of security around it, give them some confidence, and then we get that all set up into the portfolio. Now, one of the things to consider is, what is your exit strategy for that finance? What is the exit, right? So if you're raising the funds, you go find your deal, you go buy your property, and then you refurbish the house, because typically we buy houses for a discount. Of course, that's the easiest way to get the best return on your money, just buying for full market value. It'll be very difficult to get a return, because whatever you buy it for, whatever your deposit is, plus your legals and stamp and all that stuff, that's what you've got invested in the house. Whereas if you buy a house for a discount, as we discussed last week on the Property Channel 1, how to buy a house for £10,000, as we discussed within there, you can see if you buy for a discount, then when you refinance the house after refurbishing, you will get a percentage of your money back. So you'll then only have a smaller percentage of that money invested in the house. Now, this is the finance that you might go, okay, well, how do I pay the investor that amount? And I'd much rather say, okay, well, we got 10,000 invested rather than 30,000 invested. because it's significantly easier to get is the first step. And secondly, because it's a smaller feeling of risk for any investor who's involved. So what you can do with that 10,000 is, instead of then saying, okay, well, let me give you the 10,000 back. Firstly, I'd always suggest get the investment for longer than you need it. So a typical project from start to end, including refinance and everything inclusive, is normally somewhere between 8 and 12 months. Okay, we normally bank on somewhere around 10. So I would always suggest make sure you raise any finance, make sure you raise it for a minimum of 2 years. Very simply because any less, when the time comes, you're going to have a very short window in which you have to recover the funds and get them paid back. Whereas if you've got it for 2 years and you finish the project, everything's in, and you manage to organize the last 10,000 within the last couple of months, you can then give them their money back ahead of schedule, in which case they are significantly more likely to want to reinvest, which is right. You know, they're going to get a better return with you than they will elsewhere. So if you do get to a situation, however, where you have some money left invested in the deal and you're going, okay, well, I've got 10,000 left invested, I'm paying my investor back however much he's invested, 60, 80,000, minus the 10,000, you have two options. So either one is you can try and convert your investor into a longer term investor. So you say, look, you leave your 10,000 in here. What I'll do is I'll give you X% a year and I'll pay you monthly. And then you just get paid every single month and you never have to worry about that money again. You'll just keep getting an income for the rest of your life. Okay, so that is option number one. If the investor wants those funds back, your alternative is to raise somebody else into the deal, okay, and bring in a longer term investor. So please understand that some investors are looking for short-term money. They want their short-term wins. They want to go use that money elsewhere. And some investors are just looking for an income that sets them up for the rest of their lives. Okay, a simple cash flow. Now, we have investors of all sorts. So we've got investors that are in on the small level, investors that are in the big level. We've got investors in the property business, investors in the trading business, investors in the tech business. So we've got investors across the board, and many of them want different things. But what we always try and aim for is converting investors into longer term investors, because the vast majority of people understand the first priority for us as human beings is to try and replace our income so that we can then leave work and spend the time in of our lives and of your lives doing the things that you want to do. So it's helping people do that and converting them into a long-term investor from the get-go. However, some investors will insist that they want to be an investor short-term initially, build a bit of confidence, and then perhaps switch to long-term. Just as a bit of an idea. So that's the three biggest challenges around raising finance, and that's sort of how you can sort of handle those and deal with the mindset work behind it. Now, interestingly enough, we obviously run a lot of seminars and stuff all across the world. We've spoken in 28 different countries across the world in front of thousands of property investors, personally mentored hundreds of property investors in the market. And it's interesting because what I want to test as part of us doing this new live, hopefully firstly you're getting value from what we're doing. But first, the other thing that I want to test is how far our reach is when it comes to doing this. So what I'd love for you guys to do is, depending on where you're in the country or in the world, I'd love you just to drop a quick message in the chat box just saying where you're from. And this, for me, this is always terrific. It's fascinating to be able to see. And we've got people from all across the UK. I know we've got a whole bunch of our mentorship students currently watching as well, which is very cool. But yeah, just do me a favor, just quickly in the chat box, just drop us a quick message as to where you are from originally, which will be very, very cool. Okay, and next what I want to do is I want to actually open this up to some more Q&A as well. So I've given a little Congleton, perfect. Thank you, Kathy. Charlotte, excellent tag. Okay, so UK for Tony. So I know we've got a lot of Swiss mentorship students, Swedish mentorship students. We've got mentorship students as far as Singapore. Unfortunately, Singapore probably won't be catching this right now because it's 20 past 8 at night, which means it's probably 20 past 4 in the morning for them, so it's pretty early. I very much doubt any of them are up at the minute, but hopefully they catch the replay. So yeah, so do drop in the chat box or give us a like if you're from the UK, which is always very, very cool, nice and simple. Just hit the like button just so I know that you guys are tuning in from across the UK. What I want to do is I actually want to open up the live. So I want to open this up to some questions all around property, all around finance. Now I know raising finance is a big issue. As a matter of fact, let me just check in. If you've got any fears or concerns or challenges around raising finance, just hit the like button for me. Likewise, as soon as we are off and that you're catching this recording, just hit the like button for me, because it just makes it nice and simple for me to be able to see and be able to gauge the level of, whether it's worth me revisiting the subject in the near future for you and going through a lot more Q&A. But in the meantime, if you guys have any questions, do just drop it in the chat box and I'll make sure I answer any questions for you. Awesome to have you on, Charlotte, as well. Also, Tony, really cool to see you on here as well, Tony. Thank you very much for joining in. Very cool to see you guys. So obviously a few of our mentorship students are joining as well at the minute, which is very, very cool. It's really interesting. So this is the first Facebook Live I'm running directly from a camera. So in terms of the conversation dialogue, it's a little bit different to what I'm normally used to. For those of you that tuned in last week, you will know we actually ran this through Vimeo and then uploaded it directly into Facebook afterwards. But yeah, so just sort of checking in. If you guys have got any questions, please do ask any questions you have, and then I'll make sure I get them answered. In the meantime, I figure it'd be useful to explain the standard process of how you'd raise finance. Would it be useful to go through the entire process of how you'd raise finance, the logical process for you guys? I just sort of want to check in. If it is, then give me a yes. I might want to make sure I hit the nail on the head. I don't want to just present something and offer something if it's not something that you're after. So would it be useful if I go through the entire process of how you'd raise finance, the logical process? Just sort of want to check in. It's interesting. We're not getting a lot of comments at the minute, which surprises me because, okay, perfect. Oh, so it's just, I have to scroll down. That's what it is. So yes, so, okay, brilliant. So what I'm going to do is I'm going to go through the typical stages of when it comes to raising finance as to what you normally do. Now, I tend to do a lot of this on the whiteboard. So if you bear with me 1 second, just want to make sure I don't pull my mic out. So this is some of the stuff from last week where we went around how to buy a house and the actual process around that. Please feel free to catch the recording. The recording was pretty cool. It was a pretty cool session. I quite enjoyed it. In terms of how to raise finance and how to move forward on that is obviously this week. So in terms of the standard process of raising finance, the first thing you want to do is to create a list. Okay, so that is the very first thing. Okay, let me just highlight this. Okay, so you want to create a list, and this is going to be a list of everybody you know, so all of your contacts, and I mean all of your contacts, everybody you know, top to bottom. Okay, nice and simple. Then off the back of that list, number 2 is you're going to prioritize them. Okay, now it's not going to be in the way that you think. Most people think that, oh, you need to prioritize them based on who you think has money. No, that's not correct. Firstly, you'd be amazed at who has finance put aside. Secondly, also, I would love you to be having conversations with people that you feel comfortable with and you trust and you care about, and likewise they trust and care about you too. Okay, nice and simple. So you create your list and then you prioritize. Now you actually prioritize them based on how well you know them, so your relationship with them. If you've got a really solid relationship with them, prioritize them as a number 10. If you have no relationship with them, if you don't know who they are, they've just randomly turned up on your Facebook feed, okay, prioritize them as a 1. And the idea is you're going to be approaching the people you know best first. Don't worry about how much money they've got. Literally, you approach them. Okay, then number 3 is you're going to book a coffee. Okay, book a coffee, nice and simple. Okay, obviously I'm scratching the surface here. On our 3-day training, we actually go through how to do all of these broken down, how to actually do this step by step. I'm kind of skirting over it because I am aware of the amount of time we have. It is a Facebook Live. I can't spend 3 full days on here with you as we typically tend to do for our trainees. So then you're going to be booking a cup of coffee. Give them a call, get them out for a cup of coffee. Now there's a few things that you need to say. There's a script. Again, it's something we actually cover on the 3-day training in terms of how to open up that dialogue with them. Okay, so book a coffee. And then number 4, when you turn up, okay, you want to ask their opinion. Okay, and this is going to be on your investor document. Okay, now our mentorship students obviously get access to our templates. We go through the investor document a little bit on the 3-day training as well as to how that looks, what's involved. how that all pieces together. Just want to check in. Can you guys all see my screen okay? Just want to make sure before I just sort of carry on and I'm talking to myself. Can everyone see my screen okay, out of interest? So I want to check in. Unfortunately, it seems like we have a bit of delay in conversation, which is interesting. Okay. Okay, yep, looks that way. Okay, brilliant. So yeah, so then you're going to be asking their opinion on an investor document. And you're basically saying to them, look, I've got this investor document. I'd love to get your opinion. Can you take a look through and just give me your thoughts as to feedback on the offer? Okay, and what is the offer, and just getting some feedback on the offer. Off the back of that feedback on that, they will either say, yes, I really love it, I'm interested, or they'll say, look, this isn't for me, sounds very interesting, etc. Or they might say, well, I actually know somebody who would be interested in this. And this is your basic conversational dialogue around raising finance. And again, you always start with the people you know. Now, if it's people you do not know, as was raised as a previous question by Adam, make sure that you build a relationship with the people first, get to know them, find out about them, build a bond, build a friendship. And only once you've got that friendship, at that point, you really want to be engaged in this conversation. Either that, or you can approach them directly and say, hey, look, we've got an investment opportunity, but I can only work with you if you're a high net worth individual. Do you know if you qualify? And then just get the information off of them at that point and get some confirmation that way. Okay, so obviously this is your basic process as to how you do it. Now there's a whole bunch of dialogue around this. And again, on the 3-day training, we do this as a deep dive. Obviously, I can't go through everything here. I don't have enough time. Hey, Kapil, awesome to have you on, buddy. Long time no speak, man. I hope you've been amazing. I hope you've, hope you're getting on well and you and your family are staying safe with all this stuff going on in the background. But yeah, awesome to see you, buddy. But yes, so obviously this is your step-by-step, nice and simple. And like I say, there's a whole dialogue around this we cover on the 3-day training. Primarily, obviously the list is pretty simple. Prioritizing the list is equally simple, but it's understanding what you need to say to people to get them curious about having a nice cup of coffee with you and getting them to say yes about the cup of coffee. Secondly, it's about how you actually put together your investor document. What do you need to have included within that? Obviously, there's a lot of information in that document, and if you just put together any old document, it obviously won't have the same impact as if you have the right information that demonstrates first credibility as well as information on the deal, numbers, etc. And then lastly, it's how you actually go about the conversation with the investor, what you need to say, how you need to say it, what you need to do. And then we also go through security. So in terms of what happens after this, what documents you need to put in place to make sure the investor's all set up, all secure. Make sure that you can get the funds in your bank, make sure that it passes with solicitors. Some of you guys that are already investing, you will know solicitors don't always like investor cash, not so much the solicitors, but it's primarily the banks who are lending the money. So typically it's better with bridging finance, okay, which is obviously high interest finance. Okay, has this been useful? Just want to sort of check in with you guys. Is this useful for you in terms of a bit of a step-by-step process on what you need to do to raise finance? Just sort of want to check in within the chat. So just want to confirm if this has been useful. Likewise, I'd love to sort of open the floor up to a little bit more Q&A, because obviously we've had a few questions that have come through over the recent time. We actually just ran a mastermind session for our mentorship students a week ago. And this was a hot topic, and interestingly enough, the subject matter lasted about an hour and 40 minutes, and it was only supposed to be an hour block. So this is obviously a conversation with a lot of contention around the industry. So so just wanted to check in. Sounds like everything's all good. Sounds like you guys have no questions, which is nice and simple. If you have got any questions that come off the back of this, and you're catching this as a recording, please just feel free to drop the question in the chat box. Either me or the team will get back in touch with you and we'll respond to any questions we can. In the meantime, thank you very much for tuning in. I really appreciate you guys taking the time, having a bit of a listen to our Facebook Live. Hopefully you've taken some value in terms of how you can raise finance, what are some of your logical steps, what do you need to do, and also that you've taken value from a little bit of the mindset conversation and the belief point of view that will help take you forward. I'd love it if you guys took some value out of this video. Okay, you've got a power type point presentation. how would you go about showing that? Okay, really good question there, Adam. Thank you very much for asking. In terms of how you'd best go about doing that, you can actually, there's an option on PowerPoint as well as on Keynote, which is what I use, where you actually click File, Export as PDF, and then it comes out as a PDF. That PDF you're typically going to be printing out. Now, let me just ask a quick question to challenge some beliefs. Do you put your investment return within the document, within your investor proposal document? Just a quick, useful question, because I always love this question. People always have a variance in answers, but there is really only one answer, and I think it's very useful to sort of check in. And the answer is no, basically. No, you do not. So thank you. So no, you do not put in the investment return, and the reason very simply is because what might seem like a decent return to you might be either offensively low to somebody, or it might be so high that they feel like it's too good to be true and therefore do not trust the whole option. Okay, very simply. So my suggestion when it comes to raising finance is always to leave that blank and say return to be discussed, and then have a conversation with whoever you're having the conversation with at the time of showing the document, saying, hey, look, basically we got to this point, and obviously, as you can see, I've left the return blank. Now let me ask you, what are you currently getting as a return in the bank? Okay, now I'm anchoring the bank return as our initial return because it is very low, and that's typically where the vast majority of people have their money. And the answer is, of course, next to nothing. And you say, okay, and what return would you feel is fair for you to be getting in terms of this investment opportunity? Then the answer that they give, add a little bit on top if they're being reasonable. If they're saying like, I don't know, 4%, so okay, well, we can give you 5% or 6% a year. If they're saying, look, I want 12%, you say, look, you're being offensive. Please show me where you can get 12%, and I may chuck some money in there as well because it's unlikely that you're going to get that. Now, unfortunately, one of the challenges we had early doors with our investments is we raised funds based on too high a percentage return for our investors, which basically crippled a lot of deals, and I had no idea at the time. And that forms part of the learning that brings us here today as to why I'm here presenting to you guys. So you can print it out as a PDF, and that PDF then you can take along to your investor meetings there, Adam. Hopefully that answers your question. Really good question as well. Thank you. Kathy, how do you improve your mindset around money and getting over talking for money? Okay, so really good question. So the vast majority of people, when it comes to money, there's a lot of fear and baggage, which fascinates me because the reality is money is a very welcoming thing. Money holds no personal emotion. It's not an angry thing. Money doesn't make you something you're not. If you're a good person before you have money, when you have money, you just become a better person. If you're an asshole before you get money, you're going to be a bigger asshole with money. Long and short of it, very simple. So in terms of money in itself, it holds no emotional value, and therefore there's no reason to have fear of it. The irony is we tend to carry a lot of beliefs around money, which is not based on us, it's based on the beliefs of our parents. So anytime you find yourself responding in a certain way to money, so as an example, there's a nice easy money exercise you can do where you write down money is, and just write down the first thing that pops in your head, and do that 5 or 6 times and take a look at what actually comes up. And then ask yourself, which of your parents or, which of your carers has that same belief or thought? And then you'll realize the fact that that is not your ingrained belief of money. That is somebody else's belief of money that's been projected onto you. And then it's your responsibility to understand how to get rid of that belief so that you don't pass it on to your kids and their kids, etc., etc. Now, the easiest way to actually change your mindset around money is, the best thing you can do is start to get yourself some NLP or mindset training with some experts. There's a fantastic lady called Michelle Masters. Search on Google Michelle Masters NLP. Her and a lady called Yajay, spelt Jade. Basically, they do all the NLP work for us and our mentorship students, and they are amazing. And I mean, literally top drawer. Michelle Masters, she wrote a book called Money Magic. Just go online, it's super cheap. Amazing book, will change your life forever. Go get yourself that book, Money Magic, and that will enable you to start to recreate those beliefs around money that have been holding you back from being able to get money so far. Failing that, we also do a lot of mindset work on our 3-day trainings where we start to help you we talk about 20 different ways to raise finance, some of the challenges people have, a lot of the beliefs, where the beliefs come from, how to be able to re-engage those beliefs, and how to basically be able to increase your bank account while feeling comfortable doing it. And that all forms part of what we cover there. Okay, replying to admin, from Sam Norris, I'd convert this, put this into a PDF. I'd keep it on your phone files as well as on your computer, so when your networking event, you can actually quickly email it to the potential investor. 100% there, Sam. Again, the only challenge is if it's an investor you don't yet know, you just got to make sure that when that goes to them, either you confirm they're a high net worth or you build a relationship with them. Or just make sure that before any money changes hands, you've confirmed they're a high net worth. Nothing wrong with engaging them at this point. Just a couple of things you need to keep abreast of to keep yourself legally above board. Now, interestingly enough, that is not a policed subject. It's only an issue if people complain. So take with that as you wish, but just consider that for a second. Hopefully that answers that. So yes, a really good question, Kathy. The easiest way to get some mindset work and some belief work is just attend some seminars, speak to the right people. And the most important actually is something to consider, which is who do you spend your time with? Now, if you spend most of your time with people, and let me just be clear, I'm not knocking your friends group if you have a friends group that fits the bill of this, so I do apologize if that is, but I'm not knocking that. It's just a different choice. But if you find that your best friends, so the 5 people you spend the most time with, are typically in the pub, you'll likely find that your life, you tend to spend a lot of the time in the pub. And this is the term, your network is your net worth, and it's so very true, where your 5 people that you spend the most time with, your life will look very similar to theirs. Now, if the 5 people you spend a lot of time with don't tend to have money, then you'll probably find that you don't tend to have money. If the 5 people you tend to spend time with are big thinkers and they're thinking on a different level, they're thinking on a global level, thinking about building multi-billion-pound portfolios and starting to do much bigger things, and you're spending a lot of time with these, then by nature, by habit, by force, if you like, your beliefs and thinking and understanding around money will continue to increase and improve, and you'll likely find that your bank account changes. So it makes you think very differently about who you tend to spend the most time with. Now, just to be clear, this is not a chance for you to say, hey, Dave, we're not going to hang out anymore because you don't have any money. That's not what this is about. I'm not saying drop your circle of friends. What I am saying, though, is perhaps look to expand the circle of friends you've got into people who are looking to achieve things that you would love to achieve more of, or who have already achieved that. Because these are people that you can then start to benefit and learn from by spending more time with, including gleaming their beliefs around money and finance. Okay. Yeah, would love to go to the pub as well, Dominic, Kathy. To be fair, I'd love to go for a beer. I'd love to get out and actually hang out with some friends. Although, if I'm honest, I'm thoroughly enjoying the family time, so it's certainly worth it. Okay, so Adam, starting to do a few videos to try and get some interest, showing both sides, the investor side and the builder side. Okay, Adam, so obviously you're a builder, which I am aware of, which is fantastic. And it enables you to start to build credibility. Now, understand that the whole premise of the videos, the structure. Now, obviously, we're doing something very different here. I'm trying to just deliver content and value to the audience, you guys, and everybody else that tunes in. But as a standard, if you're trying to build that database and that relationship, if you take a look back on my profile from many years ago, back when I was first kicking off in property, probably about 4 years ago, we're doing a lot more videos on walkthroughs of properties, doing videos with mentorship students, doing videos with people that we were doing. So we used to do viewing days where we teach people how to view houses, where we did a whole bunch of stuff. And we used to do a lot of videos based on this. Now, interestingly enough, is the more videos you do, the more credibility you tend to build. So people go, okay, he's very credible, he's doing this, he's doing this, he's doing this, he's doing this. And the beauty is for every single project you have, every investment deal you have, you've got so many available videos within that. So you've got the video when you first buy it, you've got the video when you first view it, and you make an offer. You got the video when you first buy it. You got the video when you start to rip out, first fix, second fix, all throughout the refurb process, when you're tenanting it, when you're refinancing it. So you've got all of these video opportunities per property. Now, if you do 5 properties and you do a whole bunch of videos per property, firstly, that's a lot of video and it's very good. Secondly, it gives you an awful lot of credibility. So people see this and immediately you become a credible source. So being on video enables you to be a very credible source. In terms of your typical video times, just as a little bit of help and guidance in terms of what you're doing, you want to try and keep the videos to within a couple minutes long. If it's a shorter intro video, typically 30 to 60 seconds, 90 seconds at a max. If you're doing a walkthrough video, probably about 2 or 3 minutes, even if you have to cut it through. So Adam, are you doing Mac or Windows out of interest? What do you sport when it comes to your tech equipment that you currently use, that you're going to be editing your videos with? Just sort of want to check. Obviously I'm looking down here because this is where the comments are. There's a really interesting delay. Like every comment shows a minute ago or 3 minutes ago, even though obviously we've had this all sort of ticking through. So I know we're going to have a whole bunch popping through in just a second. Okay, but yeah, so curious, Adam, are you Mac or are you Windows? The delay of response is very fascinating. So I'm used to running live events, face-to-face events where like you get instant feedback. Whereas obviously here I'm asking a question, then I'm waiting. Mac laptop, Android phone. Okay, brilliant. So on your Mac, okay, you have software called iMovie, which you can download absolutely for free if you've got a Mac, if you don't already have it on there. Yeah, good lad. Get your iPhone soon, man. iPhones rock. So your iMovie, you can basically drag and drop the video into there, and you can edit and cut and do whatever you need to do within there. And it's super simple. You can add overlay photos, you can add picture-in-picture, you can do all sorts of stuff to make everything just look a lot more professional, a lot sexier. So highly recommend you use iMovie, and then you can cut your videos down, cut out the not so interesting stuff and bring it all the way down to a couple minutes before you then post it across your social media outlets, and that will then give you a lot more credibility with your investors and certainly make them more interesting. One of the biggest tricks is make sure that you're giving a lot of value and content, and try not to pitch too often. I talk a little bit about our 3-day, but I try not to pitch because for me this is a value exercise or a value episode for you guys to make sure you get the most value from this time as opposed to me pitching and presenting. That being said, I mean, if anybody has any further questions, please do drop them into the chat box. I'll make sure I answer them. If there's no other questions in the meantime, just to let you guys know, we're going to be running a 3-day in about 3.5 weeks, which is going to be a live stream. We ran a live stream a couple of weeks ago, went absolutely fantastic. And it's super cheap. We got the ticket super cheap. If you're interested, just drop a message. I think it's £97 a ticket. And then you got 3 full days training where we do a full deep dive into raising finance. Matter of fact, we take about 2.5, 3 hours into how we do that, which would be very cool. Okay, so appreciate the help. Ready for my close-up. Okay, ready for my close-up. I love it, Adam. Awesome. So yeah, so if you're interested in a 3-day, you should get a link popping up at some point. All you got to do is click in. It'll give you a ticket. It's a lifetime ticket. You attend any one of the live streams. We're going to be running a few, so we're typically running one a month. So if you can't make the one in a few weeks, then it's no problems. Just get yourself booked in. Feel free to bring a guest, friend or family, nice and simple. And that's it. And I look forward to seeing you guys in the 3-day training. Vice versa, we're going to be running these live streams for the Property Channel. We're going to run it every single Tuesday at 8 p.m. Not quite sure what we're going to be covering next week. I'm sure Kathy, who assists us, will be posting up what we're going to be covering next week. And just make sure you tune in, turn up. If you've got any questions, please feel free to bring them along. Ask whatever questions you have, property questions, business questions, whatever. I absolutely love them. I love coaching, I love mentoring, it's what I do. And I spend a lot of time with our mentorship students doing it. But that being said, it's been an absolute pleasure to be able to spend a bit of time with you guys. I hope you've enjoyed the video and the feed. I hope you got some value, understanding a little bit more about raising finance. I will continue to refine and improve what we're doing to ensure that you get the most value of our time together. Hope you have an amazing week. I hope you're staying safe, keeping yourself clear of the whole corona thing. Please post any questions you have into the chat, and also feel free to post where you are in the world, just so I know our reach as to where we're going. And like or comment if you've got any challenges around finance or fears or concerns, just so I know whether we should revisit this whole subject and take a bit more of a deeper dive for you guys to give you a little bit more value, a little bit more input. But in the meantime, thank you very much for tuning in. It's been an absolute pleasure to spend time with you. It's been Richard Van Ommen. Thank you very much. Bye-bye.